right, this is Mike Flynn here at the Real Deal Forum. I have Lee Bergstein with me. You're hanging in there, Lee?
We are still here, unfortunately.
Yeah. It's
fortunate. It's fortunate.
Nah, it's not too bad. I'm definitely going to have a headache after this. Pretty loud in here, but it's good. The place is buzzing. There's a lot of energy. And we're going to bring some more of that energy now. We've got Dan Marks with us here. Thanks, Dan, for joining us. Dan is the CEO of TerraCRG. He's got 2 decades at least of commercial real estate experience. I think $2 billion around with TerraCRG,
Something like that.
Something like that.
Don't be modest.
And, yeah, that's not the place for modesty. Not in this room. But yeah, also, more importantly, maybe an industry leader. And we want to talk to you primarily today about, the multifamily and investment market, which has had some interesting turns in the last year or two, to say the least.
Yep. Well, thank you guys for having me on the show again. It's a real honor to share the mic with you. So thanks for giving me a few minutes. I appreciate it.
Yeah. So I wanted to start by just reading a few stats about the state of the market that actually, I think, were released by Terra. Brooklyn investment sales market recorded a total volume of $1.2 billion in the first quarter. Sounds great, but it's actually a 25% increase in dollar volume year over year and a 61% drop from the prior quarter.
Right.
I'm going to get into retail and industrial, but high level, why are we seeing that?
Like, data can be easily manipulated, right? And from quarter to quarter, there are a lot of things that can influence that. It's not uncommon. I did a 10-year study. So TerraCRG does a annual market report for the last 12 years. We just recently started doing quarterly reports a few years ago, biannual a few years before that. So I did a study on the quarterlies. It's not uncommon for a fourth quarter to be really big because there's year-end closings, there are deals that people are grinding through all year. For tax purposes, you see a big pop in the fourth quarter. And in Brooklyn, there were multiple $100 million deals that closed in the fourth quarter,
right,
and only 2 that closed in the first quarter, which is still notable in Brooklyn. But nonetheless, you're going to see a big change. So I wouldn't let that number scare you. We really look at...
We want scary on this podcast.
You want scary? All right,
let's see
how
scary.
Scary can we get
the headlines.
Well, let's put it this way. This isn't scary. I think it's kind of inspiring. In 2010, the entire Brooklyn market was a $1 billion market annually.
Wow.
Now we're talking about feeling not great about a $1.2 million quarter. So having some historical perspective, I think, is critical when you're thinking about the market as a whole. And I know we're homers and we focus only on the Brooklyn market. We're eternal optimists as commercial advisors and brokers. But the reality is the market's pretty stable. And I tend to look at transaction volume more than I look at dollar volume, because dollar volume can be severely impacted by an $800 million deal like Camber purchased, a stabilized affordable portfolio out in East New York in the closing days of last year. That's going to have a dramatic impact on dollar volume. It's one trade, right? So when you look at it over the course of the year, we're very much on average. On average, Brooklyn does about 300 closings a quarter. That's about 1,200 a year in and year out for the last 10 years. At the peak, you'll do almost 2,000. And in a pandemic year, you're still seeing hundreds and hundreds, over 500 transactions, even in the pandemic.
Right. Yeah. It does put it in perspective. So that's good. Good question, Lee.
Thanks, buddy. Well, as you're talking, I'm curious, though, look, I'd be remiss if I didn't ask about the election's impact on the market. And not just the election, obviously, but the policies that followed the election, between tariffs, the instability of the stock market, I guess the instability of the broader economy in general.
Yeah.
Has that had an impact yet, or is it going to have an impact in the future? You can answer it one or both ways.
Yeah, well, 2024 had a lot of things that will impact the market, right? So 45X, I don't know if the audience is so in the weeds on stuff.
A 1-minute primer on what it is would be great.
So a tax incentive.
Mostly for Mike, not for anybody else.
Mike, there are things called tax incentives that help people pencil out deals. So last year, after a multi-year hiatus, there was no tax incentive for builders to build. And so last year, at the beginning of last year in April, this 45X passed out of Albany. That now gave a tax incentive for people to develop. However, there are some issues with that incentive that we can get into if you want. But beyond that, the city of Yes passed. That was a citywide zoning initiative that is going to have big impacts on the way that people look at sites and develop sites and operate in the market. The election was also another really big moment last year. Whether you like it or not, whoever won or lost, when elections are over, people can't use that excuse anymore. I'm waiting to see what happens with the elections. It's happened.
Right.
So now in 2025,
We know it's happened. It's
Yes.
pretty clear. There was some nominal change in the.
yeah.
But is it clear whose economy it is?
It's clear. It's clear.
Sorry, couldn't resist that one.
Well, so look, I think the reality is, I think people expected broad sweeping changes, bold moves to happen. A lot of what's happening in Washington is, classic negotiation tactics, going in aggressively, pulling back, just getting a seat at the table. So even this talk of tariffs, a lot of our clients have started wondering if it's going to see an impact on like hard costs, the way they're implementing those costs. But the reality is it's way too soon to tell.
Yeah.
These are slow moving impacts. Yes, materials come from Canada. Yes, materials come from overseas. Obviously, tariffs are going to impact those. But we're not really seeing it yet in our underwriting assumptions that we're really gathering from talking to developers in the market. So too soon to tell, but probably yes. Probably there will be some sort of impact there.
Right.
Even if there's no impact, to what extent do you have concerns that just the perception of an impact will impact the market and the uncertainty surrounding the future of what's going to happen in the economy?
So real estate investors despise uncertainty, but there's always uncertainty. There's never a moment in time. The only time people think they had certainty is when they reflect back,
Right.
and they have this 2020 vision. And if they were right, they say, "Oh, I knew that was going to happen." And if they were wrong, they'd be like, "Nobody saw that coming."
Yep.
Right?
Yep.
That's what I do every day with my clients.
Exactly.
It's the best way to practice law.
It's a good practice. You should
Mike
keep
doesn't
doing
do that, but I do.
No, that's hindsight bias. That's what they call that. That's the technical term for it. Lee just learned something new about himself.
Every day. That's why I do the podcast.
But there's always uncertainty, right? We just know today we can name today's uncertainties. It's, by the way, a volatile stock market is not necessarily bad for the commercial real estate industry. Commercial real estate industry is typically where people go when there's times of uncertainty in the equity markets and stuff like that. These are long-term holders generally. You're not going to make a quick dollar. You're not going to buy today and it's going to be worth more tomorrow. You have to add value. You have to hold on. So for us, that part of uncertainty isn't so bad.
Yeah.
But uncertainty around pricing deals and trying to pencil out development deals, that's hard. Uncertainty around the political wins locally. So we have a mayoral election coming up this year.
We just did a podcast about it 20 minutes ago.
Perfect. So if this one's airing before, I apologize. If it's airing after, perfect.
I'll cut you off and we'll end the podcast immediately if you start overlapping.
But the reality is the mayoral election has some impact, but the city council elections are far more important to the real estate industry than the mayoral.
Right.
Mayoral has a bigger microphone, but as far as actual impact on the way that people can operate in the market, ULURPs, zoning law changes, whether or not they happen is really at the discretion of city council. The other thing I just want to touch on, because I know we want to touch on rent stabilization, is that the 2019 rent laws have been an absolute disaster for the housing industry as a whole. And I don't think that was the intention of the politicians. I want to give them the benefit of the doubt, because I think in principle, it makes sense. We want to protect our tenants. We don't want rents to go high. We don't want landlords coming in and kicking tenants out. Of course, nobody wants that. But the underlying and the blowback that we've seen, and now we have enough history here to look, there is the impact is catastrophic. And when you're not incentivizing people to improve their buildings, to rent vacant units, and you don't have a tax abatement to encourage new development, and then when that new abatement comes in and it doesn't encourage really big development,
Right.
you're throwing stones into a pond. Like, you're not going to fill that pond up. It's just, there's too big of a crisis at our hands, and the rent stabilization laws need to be repealed. They need to be drastically changed. 45X needs to change the way that they're disincentivize people to do larger products. And if these things start to happen, you'll actually start to see rents come down. You won't have this affordability crisis that you have in New York right now.
Right.
But this is truly driven by policy, because investors can invest here, or they can go to another state, another city. This New York, we're New Yorkers, right? We think this is the center of the universe.
Right.
It's not. I'm sorry.
Yeah.
Brooklyn's the center of the
Brooklyn's
universe.
the center, actually, not Manhattan. But that's just the reality. And we've had so many developers say, I'm going to Miami, I'm going to Nashville, I'm going to Dallas, I'm going to name the city. There's so many other cities where you have less red tape and people that are welcoming the development. And so until the policies start to shift, we're going to continue to butt our heads up against this wall, and investors and developers play with the cards they've been dealt.
Right.
Right?
Yeah. Yeah. To me, and we've talked about this topic a lot on this podcast. It's in the news all the time. It's been 6 years of this, I guess.
Yep.
One thing that has been a big takeaway for me is politicians, they're incentivized to take action, right? They hear from their constituents, the rent's too high. That was somebody's slogan, I think, going back.
Rent's too damn high. I think
the rent's too damn high.
That was his party.
He was a New Yorker
party.
guy. Yeah, he created a whole party around it. It's a great talking point. It's a good way to get elected. Or if you're in office, people expect you to do something, right? I think it's very hard for politicians to say the best thing to do is be hands off.
Yeah.
So my thought is a lot of them understand what we're talking about here, and they know that you have to let the market do its thing a little more than they're doing. And you almost have to show your constituents it doesn't work. And I'm hoping we have enough of a track record of it not working.
Yeah.
And I think that's been the case. I think politicians are hearing from constituents saying, I don't know what you guys did, but I'm not getting repairs in my buildings anymore.
Yes. Well,
and when the landlords say, well, we'd love to make repairs, this is our asset, but we don't have the money and we might have to walk away from this thing, that doesn't help anybody. So I think it's a matter of time.
You're right.
But everything takes a long time in real estate.
Well, this is why you see these gaps between the development incentives. So when 421A expired, there was a gap before Affordable New York got implemented. And then when Affordable New York expired, there was almost an 11-month gap between the new incentive program. And the reason these gaps happen is because the politicians that are pushing for more restrictions, more higher affordability limits, and again, practically speaking, these make sense. We want more affordability, but you're tying their hands too much as far as unlocking their ability to develop by not making the incentives attractive enough, making them too restrictive, and the market's going to behave. So when the workers don't have, when the permits drop off a cliff and there's no new jobs being bid out, there's no jobs being created. And so then people start marching up to Albany and say, we don't have any work.
Right.
Oh, all of a sudden a new incentive passes. Okay, so it opens up the spigots again, but maybe not as big as we want. So You're right. When time passes, you see the impact of these things. I think enough time has passed. We host an annual conference. We have our only Brooklyn conference coming up in a few weeks on May 29th. We're going to have a panel talking about the multifamily market. And a big part of that discussion is going to be people who are out there advocating every day, trying to show people why these laws that were passed with good intentions actually are having the negative effect.
Yeah.
Right. That's great.
Yeah.
To what extent are you bullish on there being meaningful change to the rent stabilization laws? They seem pretty entrenched. I know there have been legal challenges. There's been some success in court, but 10 years from now, do you think we're in a similar spot and the market has to adapt to the law, or do you envision there could be meaningful change?
I just don't know how we can go on like this for a very long time, because most of the people that own these rent stabilized buildings aren't who people think they are. They're not these large institutional landlords that have, huge bank accounts. These are people who have inherited these properties through their families for generations. They usually own one, maybe two,
Or
maybe
small
three
development
properties.
companies who dipped their toe into New York by buying a property
Perhaps.
when they thought it was a good opportunity before 2019.
But a lot of people rely on these small properties that are stabilized for their life, for their livelihood, and the expenses aren't capped, but the income is. And even when people leave, you can't catch up on where the market is. Even if you make improvements, you don't get paid back for those improvements. So the disincentivization is so big. I just don't know how this can go on for forever.
Yeah.
Because there are tens of thousands of units unoccupied because you're better off leaving it vacant and praying for a change in the policies than you are getting stuck with a long-term, very low-paying rent tenant.
Right.
Even though that will help your bottom line, your expenses are going up, whatever they're going up. There's no cap on expenses. Yeah. There's a cap on your income, and not, which makes your NOI goes down every single year, which means your property is worth less every single year. So we have a lot of clients right now that are calling us and saying, I held on as long as I could, just sell it. It's worth half of what it was a few years ago. I just have to get out from underneath it. And there's not that many buyers out there that really want to get into this unless they have a very long-term perspective on the market or have a strong belief or more bullish that rules will change sooner rather than later.
So you touched briefly on 485X and some of the challenges that are inherent in that program. Certainly higher wages, the AMI restrictions. To what extent has that impacted the market, and what is your expectation for, I guess, the future of that program? Looks like right now, sitting here today, it looks like the former governor, Andrew Cuomo, is going to be the next mayor of New York. And from talking to Eric Enquist, who's the managing editor of The Real Deal on our last podcast, sounds like he will mostly promote an extension of the existing housing policy that Mayor Adams has put in place. So what do you see as the future of 485X, assuming that former Governor Cuomo is the next mayor or someone of a similar mind?
So 45X comes out of Albany,
right?
You know, so we can make a lot of noise from the city level, our city government can, and they should, because it's impacting our people. But I don't think it's going to change very quickly because, like you were saying, I think we need more time. But The Real Deal has done a number of articles on this proliferation. You guys are here. What's the word?
Proliferation.
There you go.
We said it. We synced up.
That was good.
That was weird, actually.
It
actually got weird for a minute.
Superhero moment. We're both turning the proliferation key at the same time.
We both done this at the same time. So I'm going to go on a total tangent, but for 10 seconds.
Well, you know,
this reminds me of the SNL skit Delicious Dish, and I feel like they used to turn to each other and just say the same thing. We have to just calm our voices a little bit.
Proliferation.
Yeah, proliferation. All right,
that's good.
10 seconds up.
I appreciate that.
Thank
you for your help on that one. I was after that word, I was going to say
we're talking about 45X
of 99 unit buildings.
Yeah.
Right. And why? And Sam Charney, whose booth is actually next to yours here at this conference, was on our panel last year at our conference, and he said, history is going to look back and wonder, why are there so many 99 unit buildings in New York City? This is so weird. Like, all these buildings that were built between this time and this time were 99.
Yeah.
Well, it's because
Jay-Z fans is the reason.
Exactly. So, it's like, this is what, when you incentivize people, they will do what you're doing. Again, they're dealt the cards they're handed. They're handed a restriction if you build more than 100 units. So they'll build 99 units.
Yep.
Which is not actually the intention of the plan. The intention of the plan is to unlock development. And what fights the affordability crisis more than huge development projects? Not a lot of small ones.
Yeah.
Yes, this program has spurred a lot of small development projects, and that's good, and we need that too. But don't take out the most important aspect of the development side, which, especially in Manhattan, Brooklyn does have big, large developments frequently, but Manhattan has, on a regular basis, you're seeing these 100,000 square feet. Once you get over 100 units, so in Brooklyn, we are impacted by it, but probably not as much as Manhattan, for sure. So it's an issue that needs to be addressed. Yeah.
I was talking to Eric actually about how, 15 years ago, Williamsburg was mostly empty manufacturing buildings, and now obviously it's basically, I don't know, the Lower East Side, or meatpacking. Maybe. What's the next neighborhood in Brooklyn where that is a possibility?
I don't know.
Or is that not possible anymore?
No, no, it's certainly possible, and we're seeing it where our offices are in Prospect Heights.
Yeah.
That was a very low density industrial sort of market, and then thanks to the Barclays Center development, changed that neighborhood completely. There's two very large, beautiful mixed-use multifamily buildings right across the street from our office that have totally transformed that neighborhood. And Crown Heights, I think, is a neighborhood that people need to be paying very close attention to. in less than a month from now, sometime later this month, city council is going to meet to vote on an area-wide rezoning in that neighborhood. There's already been a number of successful spot rezonings and buildings built in that area. So that you're going to see, so like Gowanus could be like the next Williamsburg because they've got this big head start.
Yeah.
All these great developers are there. The retail is going to just pop because you have thousands and thousands of people moving there now, like they're actively moving in there now. Crown Heights is like the next phase of that. It's a really cool neighborhood. It's got interesting characteristics in their buildings, old warehouses. Not everyone's gonna be able to develop, so it's gonna still have this Brooklyn vibe, but this rezoning will unlock bigger buildings, except they're gonna be limited to really 99 units and under unless something changes.
Yeah.
Right.
Yeah. Well, this is great. We appreciate the time.
Yeah.
I want to give you another second to talk about your conference that's coming up on May 29th. I don't know exactly when this episode is going to drop, but it will drop before the 29th.
Okay.
So if people want to know more about your conference, what should they know about it? Why should they come? Where's it going to be? All that good stuff.
Thank you. So yeah, on May 29th, we're hosting our only Brooklyn real estate conference. This is now our 12th year doing it.
So Manhattanites are not allowed to come.
You're allowed. You're allowed. We actually welcome more people to come into Brooklyn. And the fact that I'm here doing this right now in Manhattan
Yeah.
isn't great for my image.
Right.
But
We had to beg.
What's that?
We begged. So we
that's
begged,
true.
pleaded.
That's true.
Yeah.
I'm a man of the people at the end of the day. So, but yeah, so it goes from morning to like early afternoon. We have Jed Valentis scheduled as a keynote speaker. Melissa Roman Birch from the EDC is going to speak.
Oh, great.
It's just a great conference. And what's great about this also is 100% of the profit gets donated to Brooklyn Org. We want to make sure that we're giving back. This is really it's not our business. We're not in the business of putting together a conference. But if you're involved in the Brooklyn market, interested in the Brooklyn market, want to invest, develop, whatever it is, we have development discussion, multifamily discussion, office and retail discussion. We try to hit on the major topics, and we invite people onto the panels. It's not pay to play, so the people that are on the panels are people that we think are plugged into those topics, are going to do a really good job having a lively discussion for the audience to enjoy. So thank you for letting me talk about that, and hopefully we'll see you guys there.
But where can people get tickets? You left out the most important part.
You can go to TerraCRG.com and click on events, and that'll take you to our Only Brooklyn website, and you can get tickets that way.
Well, Dan, you are now a repeat guest, and hopefully many more times in the future. We appreciate you hiking all the way to Manhattan. We know it's a jaunt.
Yeah, I got to get back to Brooklyn, so let's wrap this up. Yeah.
Get out of here immediately. Thanks so much.
Thanks,
Dan.
Appreciate it.
For more on all things real estate and the law, subscribe to this and our other podcasts. Follow Bergstein, Flynn, Knowlton, and Pollina on social media. Subscribe to our newsletter and go to bfklawoffice.com. That's bfklawoffice.com to learn more.